Street had the sharpest drop last night. The Dow fell 878 points, almost 1,000 points. S&P was down almost 3%. Nasdaq crashed 4%. As what we have warned in our previous video, beware the September curse. You can see, as what we have predicted, this has happened again. Ask yourself in this video, were you prepared for it? Now, in this week's video, I'm going to talk about the very interesting things that how VIX behaved on Friday, because that's indicative of how things will come. Now, you can see that across all markets, be it the European markets, the Stocks 600 was down almost 2%. The DAX, the German index, was down 1.5%, and the FTSE was down 1%. All due to one thing, and yes, that is this particular gentleman, none other than Donald Trump, President Donald Trump. Well, he has threatened to put an extra 100% tariff on Chinese exports in addition to whatever they have because of China's latest policy on rare earth exports. Now, across all asset classes, you can see that things just slump and tumble. Now, leading into this sell-off, essentially, cryptos, for example, like ETH, that's Ethereum, as well as Bitcoin, which actually saw almost testing near-term resistance, actually pull back substantially. ETH has the sharpest discount below $4,000. It's been like that and has not seemed like that for the last 2 months. Gold, the defensive category, not surprisingly, surged past 4,000 simply because of its safe refuge index. But before we go any further, let's talk about the CBOE index. This chart is the one-day performance of the CBOE Volatility Index. You can see that in the longest time, in fact, in one of its 50th history, the VIX showed a jump from 16 to 22, or almost a 40% jump in a single day. In the VIX history since 1980, this is one of the 50th jump, fastest jump in a single day. What does it actually foretell? Now, two things, ladies and gentlemen, as what we have forewarned previously in our investment classes, as well as our previous video, beware the September curse. VIX jump of almost 40% just on one single day on Friday indicates two things. One is that the short covering in terms of selling puts on S&P call options is very sharp. So a huge element of that was actually people who went into hedge, selling puts on volatility, have had and forced to cover up their naked positions on their puts on CBOE index. Now, if we look at the open interest nonetheless on CBOE index, which will then indicate the performance for the US market next week and possibly European markets and the rest of Asia that will open, you will see that essentially the open interest is actually still rather high, which means that it's not just going to be a one-night affair. I think it's this long-awaited correction. This is the only first correction in the last 6 months since the sell-off, since Liberation Day in April. So are you well positioned for it? Now, if you have listened to our last video, you notice that you would be well prepared because we told you about the September curse, I told you about why you should be defensive, why you should be raising money so that you can actually go in big when this correction happens. Now, as usual, we don't waste our saliva. We practice what we teach and share with you in our YouTube video as well as our various investment classes. And we've been teaching to high net worth individuals, family offices, and index fund managers for the last 36 years. Now, this is a screenshot of my latest CDP statement. You notice that As what I've told you to be prepared, I have more than $1 million coming in terms of expiring and maturing of 6 months treasury bill, which will then allow me to buy in cheap into the equity markets should the sell-off continue. Now, that's a kind of preparedness. That's a kind of portfolio resilience. That's a kind of portfolio diversification that you want when times like this dawn upon itself. So rather than fret out that it's all right, ladies and gentlemen, REIT to me is a wonderful news because you are well prepared for it, as well as for students in my GCP Global Investment class. Because if they sell off, I have this $1 million worth of 6-month treasury bill maturing, as well as credit lines from my various private banks for the huge profits I have made on my various stocks. View this sell-off, if it continues in the next couple of days into next week, as a good opportunity to continue to buy, simply because one is that earnings growth numbers will not be hit. If this tariff imposed reason for the sell-off continues. If you look at the third quarter results, which are basically called by the market consensus, it is quite clear that 8 out of 11 subsectors within the S&P will do positive good results. In fact, the highest within the subsector, that's technology, is poised to grow for 11%. The overall market is looking for a 8% growth. Now, 3 out of the 11 subsectors will show negative growth, but it's already imputed and discounted by the market. So going forward, the 2026 numbers are looking very interesting because for 2026, if you look at the market consensus and break it down, you will see that number one, the market's looking at a broadening out possibly to the other sectors beyond the Magnificent Seven stocks. 2 is that while Magnificent Seven numbers in terms of earnings per share growth may slow down, it will be well taken care of by the remaining 493 stocks within S&P 500. This means that for a longest period of time, S&P will have a very nice broadening out of growth. And again, according to market consensus, you are buying into a market where essentially 11 out of 11 sectors will show positive growth. It is actually one of the sharpest growth that you see in the longest period of time. So going into next week, if you continue to see further declines in the market, the first sharp decline in the last 6 months since Liberation Day of April this year, it's a good buying opportunity in my opinion. Because the other things that you'll be looking at will be how the 10-year bond yield move. And look at how the 10-year bond yield move. It has gone down to below 4.1%, the second time now. And in my interview with Business Times this week, where I was quoted on Capital REIT buying into assets in Australia, I have actually reiterated that real estate investment trusts, being interest rates instruments, will be a natural beneficiaries. So this is something that we'll cover in detail in our class, the next of which is on 15 November. Do sign up quickly if you want to enjoy the early bird special, which will run until the end of next week. Hopefully to see you then and next week, and because it's going to be a very interesting week ahead. Do subscribe to our channel, and thank you for giving us the wonderful and beautiful comments. Do share it with your various friends.